Hey guys, I was doing a weekly call yesterday for my Trade Your Edge group, and a question came up as we were talking about AI prompts and using them in the ORB trade or the opening range break trade. And I've made a video about the basics of this trade already, but I want to re-emphasize a couple of points that I was making to my traders yesterday. The first one is the basic orb trade is buying as you break through the first 15-minute channel, and that's whether it's up or down. And this example, I'm showing Oklo from yesterday. So if you were doing just the basic orb trade, you would buy here as it breaks this range. The range is set at this point, which is 15 minutes in. The opening range breakout trade uses a 15-minute channel. And so this was the buy signal. What I was telling my traders is don't ignore this opening 15 minutes because you can find patterns that reinforce the trade or that tell you that the trade doesn't have a good chance of working. The first pattern I was showing my guys yesterday was this move higher, which ran into resistance here, broke through, and then came back to support. So basically now you have a level to use. This level, for me, this would now be my stop level. I wouldn't use the entire range as a stop. I would use this very clear support level, right? That would be my stop on a purchase here. The other thing is that this formation, this large green candle followed by these red candles, and then this move higher is an actual candlestick formation. It's called the rising three method. And I know it's not three candlesticks in the middle here. It's actually 1, 2, 3, 4, 5, but you can vary your technical formation slightly. It doesn't have to be exactly three candles. It could have been two, it could have been four. In this case, it's five. But when you have a large green candle and you get subsequent small candles that are falling here, and then you get another large green candle on the other side, the perfect formation would basically have a fall almost back to the beginning of this first candle. But like I said, it's a slight variation, but this is called the rising three method. So this is a bullish pattern here. And then you get the break out of the opening range that was set up again on that 15-minute chart. Like I said in my videos, I like to stack indicators. So I'd like to have 2 or 3 or more bullish indicators when I'm going long. And that's what this was, right? Like I said, don't ignore what sets up here, and it may give you more conviction to either buy or short if it's breaking out to the downside. One more example I wanted to show, and that is Oracle, because I like to play the opening range break on stocks that have had earnings recently. So the opening range breakout play is very attractive to me during earnings season. Right now, we're not in the middle of earnings season, but Oracle had earnings yesterday. And as you can see, the stock gapped higher from this 176 level up to 189 this morning. And this again is that opening range. This is the first 15-minute opening range, and you get a break. As I told my traders this morning, I assumed we could get to around 200, and basically a stock that's moving over 195 with this kind of conviction, right? Extremely bullish. It's probably going to go to 200. So I had a target of 200 from this opening range break. But I just wanted to show you what it looks like on a stock that has a large gap from an earnings play. So Again, this was Oracle this morning. And as we get into earnings season coming up, like I said, we're not in it right now, but as we get into the next earnings season, I pull this strategy out and use it quite a bit during earnings season on a play just like this. So that's what I have today. If you'd like to be in a group that meets once a week to talk stocks and talk strategy, which is what my Trade Your Edge group does, we'd be happy to have you. You can find the link in the description of the video below. And if this video helps you in your trading, let me know in the comments. Hit like and subscribe, and I'll be making more videos like this. Thanks for watching.